All right, so we have to talk about the Tesla earning call that just happened. And generally, okay, I don't really want to go through the numbers because I think relatively as an earnings on its own, the earnings report itself, relatively all right. I'm gonna just give you guys straight to the point. What are the good things? What are the bad things? And then we have to talk about the earnings call. That is when the actual destruction happened to the stock. Basically, the stock went down about 5%, 6% after the earnings call happened. You actually had about like a 2% increase after hours when the earnings report dropped. Effectively, people actually liked the earnings report, but people hated the earnings call. Okay, so let's get down to the particular different details that actually happened in this whole entire thing. Okay, so let's talk about free cash flow. Okay, it's a lot lower than expected, missing by expectation by about half. Of course, for the cash and cash equivalents, there was a little bit of a bump up from the last quarter, up about $3 billion in cash and cash equivalent. I think it's a pretty nice stack to have, but again, do understand that because free cash flow did dip more around 50% or so, well, more than 50% or so, and a lot of it actually went into R&D. Okay, and so you have to understand Tesla is in a lot of debt. Okay, so that means that effectively for the free cash flow, it's not really as much as we think they are really in. Okay, margins were actually being compressed slightly. Some would actually argue strongly because the total GAAP gross margin actually dropped by 0.3%. The operating margin dropped by 2% down to 7.6%. And do understand that it is a relatively big drop for operating margin because 2%. Of course, if you're talking about like 50%, dropping by 2% isn't really much. But you're talking about 9.6% dropping to 7.6%. It is pretty significant. Okay, of course, they also talked about Cybertruck is going to be starting production next month, aka in November. So I will add on a little bit more about this later on because this is going to be brought up in the earnings call. So I think you might want to listen to the end of this whole entire thing. FSD pricing path is currently pretty strange because you have Elon Musk coming out. I think it was the previous call or it was during Investor Day. He basically came out to say, yeah, the FSD price is going to be going up because we are providing a really good service and we think that good service should be paid in terms of the value that they actually provides. Hey, fair play. But the thing is, no one was buying the FSD, which is why Elon Musk basically came in to say that, like, yeah, in order to make it more affordable for people to actually get into FSD, that's a lie. Let's be honest, it was because nobody was buying the FSD. It was like about $12,000, okay? Not a lot of people can afford that much money. Just imagine this. This is outside of Singapore context because in Singapore, a Tesla Model 3 is going to cost you about $250,000. A Model Y costs you close to $300,000, okay? I'm talking about in America, a Model 3 is going to set you back about $30,000 and FSD is going to cost you about $12,000. Not everyone is willing to part with half of the amount of money that they use to buy the car for the software. Okay, so of course, because of that, Tesla basically went through with a price cut for the FSD, saying that in order to make it slightly more affordable for people. But let's be honest, we all know FSD is way too expensive because no one was buying it. Okay, so honestly, other than that, I think that the earnings report as a whole, I do think that the earnings report was relatively well done. Okay, the report on its own, we got good numbers. The deliveries are actually up. Energy was a beat. There were multiple beats, of course, multiple misses at the same time. The ones that I was really worried about is just cash flow and operating margin, as I always talked about every single Tesla earning reports. That's where I'm usually focused on. Okay, but today we need to talk more about the earnings call. And this is where, like I said before, the destruction came in. We saw the empire crumbling just a little bit. Okay, so Elon Musk basically talked about the macroeconomics headwinds. Okay, he talked about the different doubts that the market actually had, especially in the auto industry, which is rather cyclical because it is a very interest rate sensitive industry. Of course, when you have higher interest rates, it kind of brings forth more concerns for people who have auto loans and things of that nature. Okay, so pretty bad for a whole company because he kind of stated a problem without giving a solution. Not really a good look. And let's be honest, it's not as if he can actually make a solution for this sort of problem. We already know of the interest rates. I think the general public who are buying his car or who are deciding to buy his cars probably already know of the problem, which is the increasing interest rates. So, of course, if you are just going to be stating a problem without a solution, that's not a good look. And of course, it didn't really help when Elon Musk came into this earnings call low-key depressed. Okay, he came in, he was whining about how he was sleeping on the floor of the factory, and then while some employees was working from home. I don't know, it just felt really depressing to listen to. At some point, I'm pretty sure he shed a few tears and such. So afterwards, he basically talked about his concern on ramping up production in the Gigafactory in Mexico, which mostly are concerned in the macroeconomy yet again. Like I said before, I don't think that Elon Musk is bringing any sort of solutions to the table. He's just talking about concerns. I think in an earnings call, for you to really show yourself as strong, what you would like to show to your investors, to your potential investors, is that you're a good leader, you're level-headed, you know what is going to be happening, you have a clear path to success for yourself and your whole company and everyone working for you. And I think that during this earnings call, everything just went out the window. I think there's even a chance that Elon Musk even drank before this meeting because he was just completely out of it. And, talking about the macroeconomy, I think that, for people like you and I, if we have like a normal coffee conversation, we can talk about the macroeconomy, we can talk about the interest rates, we can talk about how Biden is destroying all of us, even in Singapore. But I don't think that's something that, a CEO of a multi-billion, once $1 trillion company should talk about. Okay, and not on an earnings call for God's sake. Like, you can just talk about it on X, once Twitter. You can talk about it on X. We don't care. Okay, you can be woke, anti-woke on X. We don't really care. But bring on into the earnings call, I just thought that it wasn't really a very nice look. Okay, but now anyway, let's get back into the Cybertruck conversation that I talked about earlier. Something really, really interesting that Elon brought up. Okay, I'm going to quote you exactly verbatim what Elon Musk actually said. We dug our own grave with the Cybertruck. It is going to require immense work to reach volume production and be cash flow positive at a price that people can afford. It will take a year to 18 months before it's a significant positive cash flow contributor. Okay, again, I'm not a marketing genius here, but I think in an earnings call, again, like I said, you're talking to investors, you're talking to potential investors, and you start off with, we dug our own grave. I think that call isn't going anywhere, let's be honest here, okay? I think something was wrong. I think he clearly wasn't in the mood for this whole entire thing. I think he should just not join this earnings call. He didn't join a lot of earnings call before. I think he should have done that for this earnings call. He just really wasn't showing a good look for himself, for the company, for his leadership. Again, because the thing is that I do not own any Tesla shares. Hence, it doesn't really affect me at all for now. But, I could be a potential investor. Well, not in the short term, not after what he just said, because he said that, it will take a year to 18 months for the Cybertruck to even generate any form of a significant positive cash flow. Okay, so, you do have to take into consideration that the Cybertruck was teased back in 2018. Okay, and FYI, for people who cannot seem to picture this, okay, that was 5 years ago. half a decade ago. Okay, so if you want to just talk about Cybertruck for the last 5 years and only start to meaningfully produce your first Cybertruck in November this year, which is next month, okay, that's 5 years of progress. Fair enough, because honestly, let's be honest, getting one vehicle out of the way and one that's this innovative to be created from the outside instead of from the inside, I thought that was pretty interesting. It requires a lot of work. Fair enough. 5 years, I think that's fair. Okay? But the thing is that if you are an investor, or if you're a potential investor who is eyeing on the profits of what a Cybertruck can bring to Tesla in terms of profits in North America, because trucks are basically one of the leading numbers in terms of vehicles on the road in North America. So if you're able to actually translate a lot of all these different truck drivers over to an electric truck, Cybertruck in this case, you are only going to start eyeing for 2025, maybe second half, maybe fourth quarter, for you to even see Cybertruck meaningfully make profit. Hopefully. All this is just hope. Because right now we haven't even seen the Cybertruck as a whole. Okay, until November when that actually happens, then we need to actually see how would the ramping up be. And then Elon Musk also talked about ramping up Cybertruck because he didn't have the confidence to ramp up the Cybertruck in such a wild macroeconomy. Again, totally understand if you're having a coffee conversation. If we're talking in Starbucks about this whole entire thing, I see it as a perfectly alright subject. But you're on an earnings call, and a lot of people are eyeing on the Cybertruck. Especially not when people were teased for 5 years about this whole entire Cybertruck release. And for him to come out to say that we don't even have confidence to do the ramping up for it. Because of course, we do understand ramping up a new vehicle is definitely going to take a lot of time and a lot of money. And right now, Tesla, like I said, they don't have that much money. Their free cash flow just went down by 50% just in R&D. Okay, the ramping up process is going to definitely take some time. But let's be honest, what kind of ramping up process will not take more time and money? When they started out with the Roadster, when they started out with the Model 3, the Model Ys, the Model X and S, all of them took time, all of them took money. And I feel that Tesla currently already have the model to ramp up at a steady pace and still make margin on those trucks. Well, on those vehicles. This term, a truck. Okay, I think that Tesla definitely can make higher margins. And I think that if they are able to make a comfortable margin on the Cybertruck, I think Tesla might definitely go somewhere. Which is why a lot of time when you talk to a Tesla bull, a lot of time they would just quote the Cybertruck, they would quote the Optimus, they would quote the Dojo, they'll quote a lot of these different things that they think Tesla would go to, say, $500 by 2024. That sort of analysis. I'm not faulting any of them. I'm just saying that this time, this earning call, Elon did not really show us the best. And I think that is scaring a lot of investors and potential investors, which is why, when it all started, Tesla was about $240, I think, before the whole entire earnings. I think it was about $240. Waiting for the earnings, it actually went up to $230, and then it went up to $235, and then immediately down. Now we're down to like $217. I can see us actually possibly seeing $200 of Tesla again. And of course, I think before that, you wanna come and start saying that, yeah, but nevertheless, Tesla is still pretty good. Year to date, they still are up about 100% and more. Hey, I don't disagree, okay? But I do think that back in 2022, December, Tesla went to about $100 on the dot, even $99 at some point. People were talking about how the price target would be at $80 or something ridiculous. And then immediately you see the following year, which is 2023, you see Tesla just shot up all the way to $200. I do see that kind of path for Tesla, but you have to also understand that wasn't just for Tesla. That was for basically every single tech company. Because if you want to talk about year to date, you can look at Nvidia. Nvidia got like a 300% increase. Okay, so it's not just about Tesla. It's just that because Tesla is in the whole entire industry where they have this kind of booms. And of course, during the 2022 to 2023 transition, that was when people started to think that they might have missed the AI boom, and then they started investing heavily over into tech industry. And then, of course, adding on with the whole entire banking crisis that we actually had earlier this year, that just added more people that were just getting out of banking industry, getting out of financials, throwing everything into your tech industry, into your chips, manufacturing, all this different sort of in industry. That's why you kind of see like a continuous rally over rally. But yeah, overall, again, I think let's talk about like just future prediction on Tesla. I think it's not going to be affecting Tesla on the long run. If you're bullish on Tesla for the long run, you should still stay bullish on Tesla for the long run. I don't think anything really changed. I think this basically just shook out all the short-term investors who might or might not want to get into Tesla. And then some people who maybe just got into Tesla a few months ago, hearing this might kind of scare them away, that sort of thing. I think in the long run, Tesla would still be a pretty good company. Of course, I think if we get multiple of such earning calls, that would definitely freak a lot of people out. So something that I wouldn't recommend, I guess. But anyway, if you like this sort of video, I would appreciate it if you hit this like and subscribe down below. And I'll see you guys in the next one. Peace out. Bye-bye.